Hello and welcome at Value Investing, where we try to estimate the intrinsic value of different companies. As usual, the disclaimer: this is no financial advice and just my personal opinion. And now let's hop right into the video. In today's video, we will have a look at Pfizer, a company in the pharma industry. They are currently trading at around $37 and are down 27% over the last year. We all know they had a good time during the COVID pandemic, but they have come back to pre-COVID times already, at least according to their trading price. Pfizer is also known for their strong dividends because they managed to increase the dividend over the last 12 years. Now let's have a look with the stock valuation tool. I've plugged in all the values for Pfizer and we can see we have a nice starting dividend yield of around 4%, low payout ratio of around 30%, which is quite nice. Additionally, we see that the earnings per share has increased over time and they are more or less at their peak. At least in 2022, they were at the peak. Now let's have a look at Pfizer with Graham's valuation, where we use the revised formula from Benjamin Graham. I've plugged in all the values and projected the growth rate of 0% as the revenue from COVID times are coming down and I didn't want to overestimate the performance. With all those values, we get an intrinsic value of around $34. Now let's have a look at the multiples valuation, where we compare Pfizer with different other companies. As a comparable company, I have used Johnson & Johnson, Novartis, PFE and Merck & Co. And I've plugged in all the values for those companies with the stock price and the earnings per share and calculated the price earnings multiple, which gave me an average price earnings multiple. Multiplied with the earnings per share from Pfizer, we get a high intrinsic value of $151. Now let's have a look at the discounted cash flow analysis, where I have plugged in all the values for the free cash flow. We can see they increased their revenue quite significantly over the COVID pandemic, as we have a growth rate of around 150% in 2021, but they are now coming down. Thus, I have projected a growth rate of 0% despite having an average growth rate of around 40%. With this growth rate, I have calculated the future free cash flows for Pfizer and also the present value of the future free cash flows. If we sum all of them together, we get the sum of the future free cash flows, considering their cash and cash equivalents, the total debt, we get an equity value, and with the outstanding shares, we get an intrinsic value of around $60. Now let's have a look at the dividend discount model, where I've plugged in all the values for the yearly dividends. Pfizer nicely increased the dividend over the years with around 6% each year. I projected almost no growth for the free cash flow and the earnings per share. However, they have a nice little payout ratio of 30%. Like I said in the beginning, thus I would project a growth rate of around 2.5%. This gives an intrinsic value of around $27. And also keep in mind, as usual, we look at the outstanding shares. We can see that Pfizer diluted the shares over time, thus they increased the number of outstanding shares, but they consistently bought back those shares, and I think they will continue this trend in the future. Now let's go back to the stock valuation tool, to the output tab, where we consider all four valuation models and we average them together to get an intrinsic value of around $69. With the current trading price of around $37 and a margin of safety of 20%, we are still in the acceptable buy range. We know that the multiples valuation is quite high. We could also consider not taking this into account. So let's remove it. This brings down the intrinsic value of Pfizer to around $41. With this valuation, we are not in the acceptable buy range with a margin of safety of around 20%, but we are in the acceptable buy range with around 5% of margin of safety. I am currently not a huge fan of this company, as the cash flow might be decreasing over the next few years, and I would be interested what you think about this company currently and in the future. Please leave a comment down below and also like and subscribe this video. This would really help me out. As always, thank you for watching.